Hi guys, it's Ian Coleman. It is Monday the 8th of March 2021. In this video report I want to discuss euro against the US dollar, but the subject I really want to cross is correlation. Now correlation is extremely important as far as I'm concerned in currency analysis and trading in general. We want products to move in unison. We did a report earlier today on oil, and as such oil is correlated to the Canadian dollar, so we talked about the US dollar against the Canadian dollar. In this report I want to focus on the euro against the US dollar, and I want to have a very specific focus on the dollar index. This is DXY on most platforms. So we're going to look at the dollar index first, and we want to get the big picture analysis. Okay, we don't really want to be breaking down into intraday charts, you know, your 5-minute, 1-minute charts. We want to be looking at a big picture. From the big picture, we can then break down through the time frames to look at a smaller picture, and it's from the smaller picture that we potentially place our trades. So on this chart here, this is the dollar index DXY. I've got a monthly chart, weekly chart, daily chart, 8-hour, 4-hour and 2-hour. What we're going to discuss in this video is the monthly chart, weekly chart, daily chart, and actually the 2-hour chart. So where is the dollar index going, or where do we potentially think it's going over the long haul? Like I said, this is a monthly chart. If we zoom in here, we can see that we've broken out of this channel formation to the downside. So what we'd normally expect is a deeper correction, so an A, B, C, D formation, taking out the base of this wave here. What we have seen over the last couple of months is a fair amount of indecision. We've got spikes in both directions, but the most important thing on this chart is a common pattern that happens with breakouts, is that we get a retest of the breakout level. So we've broken this trend line to the downside, and then we've had some indecision, but this month we're pushing quite aggressively higher. Now we've got reverse trend line resistance, I've just highlighted it here, around about 93.05, and that's important when we look to shorter time frames. Okay, we want different levels to collide, confluence. So we want the monthly chart to highlight something on the weekly chart, the weekly chart to highlight something on the daily chart, etc. So we've got resistance here, we're moving higher, we've got resistance around about 93.05. Now, big picture analysis again, 5 waves to the downside as far as Elliott wave is concerned, a nice sort of pin bar doji down here, and then we've moved higher. So as far as this time frame is concerned, then the move higher Elliott wave should be a 3-wave correction, and at the moment we've seen 1 wave, 2 waves, and then moving higher in the potential 3rd wave. If we go to this time frame here, and this is a very important time frame, okay, so we've got some unique bespoke resistance levels, 93.50 and 94.12. Now the reason that I like these levels as well is because they're near fib retracement levels. So 93.50, 93.57 is a 78.6% pullback, 94.12 is an 88.6% pullback. So there's a good chance that we will stall at one of these levels. No indication that we're stalling as yet. We might, I'm going to get onto another time frame in a minute, there's a chance for a mild correction in the dollar index to potentially buy into, I believe, but at the moment the big picture is still for this dollar index to move to the upside. So dollar index moving to the upside, euro dollar should be moving to the downside. So let's have a look at the euro against the US dollar. So big picture analysis. Okay, I believe that we're moving lower in this leg here. So this is a Cypher pattern. This is the long-term target up around 132.15. So moving lower as that dollar index moves higher, but just to form this ABC leg to the upside. Now this is quite an important time frame. This is the 8-hour chart. Here we made a near pit perfect ABC formation and have moved quite aggressively lower. We've broken the previous swing low at 119.50. Remember, it's like a trend line. It was support, it now becomes resistance. So 119.50 to the upside should be a barrier where traders look to sell into. The most important time frame is here, and this is a symmetrical pattern. So 5 waves up, we then moved lower. Remember, retracement levels normally are in, or retracement waves are normally in 3 waves, and inside those waves are 3 waves, apart from the last wave, which can be 5th wave. If you follow Elliott wave analysis, it can become extremely complicated with XYZ waves, etc., etc. So just try and concentrate on the big picture, and don't try and emphasize too much on these inside waves. So here we've got 1, 2, 3, 1, 2, 3. It's dictating that this whole move lower is corrective. What we've got here is a confluence zone. This formation will be a bat formation. So 116.88 is a 61.81, 61.8% extension of this move, which stalled close to 50%. It's then an 88.6% pullback level of this move, and it makes this rather pretty pattern, which is known as a bat formation. Again, we've got that previous swing low there, which is going to act as resistance. So this is our target level. We want a little bit more confluence than that. We want something to tell us that we're on the right track. Remember the dollar index, moving higher in the dollar index. So let's use a charting tool. This is known as an info line. We're just going to use it from current price levels, and we're going to draw it down to this confluence zone. Now forget about the pips. They're not irrelevant in the big picture, but they're irrelevant for this piece of analysis. 1.6. So we're looking for a further decline in euro against the US dollar of 1.6%. Let's go back to the dollar index. Let's use the info line. Where do we get 1.6%? So we get 1.6% just in between the 88.6% pullback and 78.6% pullback. So again, this area for the dollar index is looking very prime for a reversal. Okay, I'm going to leave you with those charts. Good luck, and I'll be back again soon with some more trading insights. Many thanks.